Good morning and welcome to our 304th weekly webcast. Now, if this is the first time you're joining on this webcast, welcome. If you've been with us before, welcome back. And so the way this call works is this is an AMA, like you see on Reddit. You can ask me anything. You can ask me business questions, career questions, investing questions, any questions you want to. And my job here, my humble role, is to help you take your career, your portfolio, et cetera, to the next level. Now, a lot of you are probably wondering why I'm sitting down right now. And the reason is because I'm getting over a cold. I went to the doctor, the hospital actually, yesterday. And what they did was they gave me IV because I was a little bit dehydrated. I'm going to be okay. I do have senior moments. The older I get, the better I was, but I'm okay. And thank you, everybody, for the well wishes. So instead, I'm sitting down today. I thought I'd try something a little bit different in my office. If you have questions about how all this technology here works, by all means, please let me know. So please keep typing your questions. Now, before we get started, I want to thank you all from the bottom of my heart for being a part of this YouTube channel over the past 6 years or so for this weekly webcast. We, meaning you and I, just received this from YouTube. And this is the play button, I think, the silver play button. So I'm going to unbox this with you as well. Okay. All right. Here is a nice letter from YouTube. It says, "Do you remember your first subscriber or your 100,000th? How about your 100,000th? Okay, great. So I'm going to open this up here. And they don't give this to everybody that has 100,000 subs, right? You have to be in compliance with YouTube, etc. And I was kind of worried they might not give it to me because I got a warning on my channel a couple of years ago. And as you know, I'm fully transparent with everything. I got a warning on my channel a couple of years ago because a doctor came on and gave his opinion on why he doesn't believe in vaccinations. I got vaccinated, so I got a warning. The warning's gone now, but I believe in freedom of speech, yeah, which is a government thing, not a tech thing, apparently. So I want to thank all of you, and I do want to thank YouTube as well, but mainly I want to thank all of you for helping us get to the 100,000 subscriber mark. So there it is right there. I guess what I'll do is I'll put it right here as well. And when you get these things here, what they also do is you got the ability to get a couple other things as well. And so I got this silver, this is heavy actually, this silver play button here as well. On the back, you probably won't be able to see that, but it says, "Congratulations on passing 100,000 subs. Thank you and congratulations to all of you. We did this together, and so thank you." Now, Udemy, which is a very important platform and partner of mine, and the way that many of you found out about me, they also just sent me this. And I want to unbox this with you guys as well. Coincidentally, it came at the exact same time. And this here is for passing the 1 million learner club. Much better than YouTube. YouTube, thank you, but Udemy did a better job. It's bigger, it's nicer, and all that stuff here. So what I'll do is I'll put this stuff over here. Again, I want to thank you all from the bottom of my heart for making this possible. This is kind of heavy, so give me 1 second. But I have to put this on display somewhere. All right, let me think about this in real time. All right, what I'll do is this. I'll use this, and I'll prop this over here, and I'll use a weight behind it. I've got a prop for everything, folks. Right here, and we should be good to go. Okay, excellent. And I'll put this over here, and then let's zoom out so you guys can see it as well. So thank you, Udemy. Thank you, YouTube as well. But mainly thank you to all of you for making this possible. This would not have been possible without all of you. And I'm proud to say that you know, I've only taken one corporate sponsorship the whole way through. Which I subsequently canceled a couple of weeks ago. I want to stay pure and true to all of you, my students. So from the bottom of my heart, thank you very, very much. Check out the birds up there. Okay. All right, let me get through the questions now. Again, if you guys have questions about the whole setup here, etc., please let me know, and thank you. Okay. That was a sympathy cough, okay? All right. All right. So first up, Shahar wrote, "Good morning, Chris. Good morning, Shahar. I hope you're doing well. Ani chotze coffee achshav, as I always say to you." Next up, George wrote, "Hey, Chris, making my way through your Udemy class. It's great. I have a couple of questions, if I may. Absolutely, please. That's what I'm humbly here for." Okay. All right. Your first question is, what are your thoughts on Sol, S-O-L, which is a crypto called Solana? And are you planning to release any updates about it? Yeah, so I pride myself on never telling my students what to buy, okay? And I don't want you to listen to anybody, including me, in terms of what investments to buy. You know, I humbly teach my students how to fish instead of providing you with a fish. Now, in my cryptocurrency course and in my MBA degree curriculum, what I've done for you, though, is I've created a process. Give me 1 second. Okay. I create a process whereby you can do your own due diligence on analyzing companies from scratch by creating what's called an S1 prospectus. Okay, so what happens is before companies go public, like Meta did back in 2012, the Securities and Exchange Commission, the Securities and Exchange Commission, what they do is they mandate that you write a prospectus. Okay, it's kind of like an annual report with a lot more details. And in this, all the risks are highlighted with the investment. And so cryptocurrencies are not regulated, unfortunately, by governments. They're regulated by the laws of mathematics, so to speak. And so these things don't exist yet. So what I do in my courses, my MBA degree program, my cryptocurrency course that you can take on Udemy as well, what I do is I teach you how to write one of these things for all cryptocurrencies. Now, keep in mind that 95% of all cryptocurrencies, in my humble opinion, are scams. So be very careful before you invest in cryptos. Do your research. Never make cryptocurrencies more than 5% of your liquid net worth, because I promise you, almost all of them are scams. Now, I publicly disclosed what cryptos I own over the years. And so many years ago, I disclosed 4 that I own. And they are as follows. Bitcoin, which I own a lot of. I set up an IRA many years ago for Bitcoin as well. I own Ethereum. I also own Litecoin. And I own Ripple as well. Do your homework, please, always. All right. Next question I've got here is also from George, which is, I haven't made my way through the course completely yet, so sorry. It's okay. If it does get covered, but I'm not completely clear on staking. Yeah, staking. Can you please talk a little bit about how that works? Yeah, so basically what that means is, from a high-level perspective, it's sort of like mining, except what you do is you kind of say, here, take my cryptos and find a way to make money from it and let me profit a bit as well. That's the best way to explain it. Now, a lot of people, I'm sure, are going to ask me about DeepSeek as well. So what I'm going to do is we're going to go and use DeepSeek and ask DeepSeek for a little bit of help on this topic. Give me 1 second, please. All right, let's go over here. Okay. And so for those of you that haven't used DeepSeek yet, it's very similar to ChatGPT. I can talk about the pros and cons of it if you want me to as well. So watch this. Explain crypto staking to me at an 8th grade level. Use basketball reference and Michael Jordan, who's better than LeBron James, and keep it very short. Let's see what it comes up with. Yeah, so this here, it's very similar to ChatGPT. This is me buying time while it's thinking here. The difference is that it costs almost next to nothing to make. So give me 1 second. And let me just copy here and log in again. I have noticed some performance issues, but apparently it only costs about $6 million to make this product versus about $500 million for other AI platforms. Okay, so new chat. I'll paste it again right here, and we'll see if we can get an answer. It's been inundated. A lot of people try to use it at the same times, which is why sometimes it doesn't work that well. Okay, I'll come back to that later if anybody has questions, but my thoughts on the product in general is I think it's a great thing for consumers, because competition is always a good thing for consumers. One data point doesn't make a trend. I don't think it's going to derail the entire AI investment theme. Yes, it might hurt NVIDIA a little bit because DeepSeek uses older generation GPUs to build its infrastructure. Yeah, but net, I think it's a positive. All right. All right, let me go back here. DeepSeek is still thinking. All right, let's move on here. All right, eNikon wrote, "Hi Chris, hope you're well." I'm great, thank you, and I hope you're well as well. Sloan wrote, "Hope you're feeling better." I am, thank you. Yeah. And then next up, Andre, great to see you, thank you. Next question is from Dana. I knew this is coming. What is your take on DeepSeek? It appears to be nudging ChatGPT aside. Again, I think competition is a good thing for the consumer. I don't want ChatGPT to absolutely dominate this market. Otherwise, they would raise prices materially. And when it comes to ChatGPT, and one of the reasons why Elon Musk is not a big fan of the company is because initially OpenAI, the parent company of ChatGPT, was set up to kind of create this AI product as being open source, hence the name OpenAI. But they're certainly profiting from it instead. And Sam Altman, who is the CEO of OpenAI, is one of the best salespeople in the world. He used to be the president of Y Combinator, which is the best incubation firm in the world that feeds the best venture capital firms. It's a good thing there's competition. Really good thing for all of us. Yeah. All right. Does this mean that NVIDIA is dead? No. But, NVIDIA was pricing in a cure for cancer. It's pulled back a bit. I still think it's a great long-term investment. Thank you. All right, next up we have Ilker, who wrote, "Hey Chris, hope you take care. Health is the most important thing in life. Thank you." And I actually had to cancel an MBA class I had. That was a sympathy cough. An MBA class I had on Tuesday night, which I never, ever do. Yeah, so I apologize for that, everybody. And we're going to make up for that lost time next Monday during our next class. Now, for those of you in the silver, gold, platinum, and diamond programs, we do have extensive office hours today and one-on-one meetings as well. And so the second this call is done at 10 a.m. Pacific time in less than 2 hours, what I'll do is I'll start the group Zoom calls with everybody as well. Okay. And this is already making me feel a bit better here in the background. If that's annoying to you guys, let me know. You guys are the customer. Thank you. And if the door being open is annoying, let me know as well. I can hear a lot of the birds, the oiseaux. Yeah. All right. All right. Next up, Coriolanus wrote, "I work in PR and a marketing company that focuses on the pharmaceutical industry. Is there a way to figure out roughly the total market for pharmaceutical marketing spending in order to work out market share?" That's a great question. So whenever you're looking to invest in a company, public or private, you never want to start a company or invest in a product where the size of the total addressable market isn't massive. And for a lot of venture capital firms I've partnered with in the past, including Kleiner Perkins, they usually don't invest in a startup unless the total addressable market is at least $20 billion. And the reason why they want the total addressable market, meaning TAM, to be $20 billion is because it would be very nice if the underlying company they're investing in gets 5% share. And 5% share of a $20 billion TAM is $1 billion in annual revenue. Now, the best way to figure out the total addressable market for any company is step one. You can go to ChatGPT or Google or whatever, pick your AI product, and you can always do a search for exactly this. What is the total addressable market of X market, in your case, pharmaceutical market? And usually what happens is they will cite high-end consulting reports from companies like McKinsey, Boston Consulting Group, Bain, etc. You can even search for McKinsey TAM on pharmaceutical sector. Okay, and if you can't find the results that way, then what you can always do is this. Get a list of the top 20 companies that dominate an industry, okay, publicly traded ones. Then what you do is you go to the annual reports of all 20 of those companies, and you get the revenue from all 20 of those companies for a given year. And that's certainly a close enough proxy for the total addressable market, especially in the tech sector where a handful of companies, 3, 4, or 5, tend to dominate. Yeah. Now, a lot of people ask me, Chris, what if the total addressable market does not exist yet and it's a startup? Well, it does, but I say this with love in my heart, you're not thinking about it the right way. So, for example, years ago when Travis started Uber, there was no online taxi market. And so what he did was he did a search on the global traditional taxi medallion market to see the market that he was going to disrupt. Now, hopefully that answers your questions. If you have additional questions about that, please let me know, and thank you. Okay, give me 1 second here. Okay, next up, Tommy J wrote, after the IPO, when we choose to buy a stock, does the company actually receive the money cash? Can you please explain how this works? No, they don't. So what happens is whenever a company does an IPO, meaning initial public offering, what they're doing is they're usually raising money from the public by selling shares, and the cash they get is usually to grow their company. Now, there's two types of shares in an IPO. Okay, there's what are called primary shares and secondary shares. Primary shares are brand new shares that are created that the investment bankers create, and they sell to the marketplace, and the company gets that money. Then there are what are called secondary shares. And secondary shares means insiders like venture capitalists, like I used to be, as well as the management team like Mark Zuckerberg, for example, and others that get money. Okay, and usually the insiders, meaning the venture capitalists as well as employees, cannot sell their shares on day one of the IPO. I mean, they can't sell their secondary shares. There's what's called a lockup, and they have to wait for at least 6 months before they sell. And if that wasn't the rule as posed by the SEC, then every single IPO would crash on day one. Now, for me, what I would always do when I work in venture capital is I don't care if this underlying company that I invested in has a cure for cancer. I'm still selling most of my shares 6 months out because from a personal risk management perspective, it's always close to 99% of my liquid net worth. Yeah. So if you ever notice that a stock that you love and you've done research on pulls back materially 6 months after the IPO, it's because of insider selling. And that should be your opportunity to back up the truck and start a big position. Yeah. And I used to short stocks heading into the lockup as well years ago. That trade doesn't seem to work anymore because it is quite crowded. Let me actually shut this down here. Okay. Because it's too hard for me to reach over and close that. No, I've got a couple curtains over here as well. And it messes up the lighting when the exposure changes throughout the day when it gets brighter outside. Okay. Moving on here. Okay. All right. Next up. That was for sympathy, but I'm feeling good. All right. Next up, Tommy wrote, can you explain how an ROI model works and how it contributes to sales? Yeah. So ROI stands for return on investment. I'm not really sure how to help you with that. The only thing I can say is that from a return on sales perspective, you can always calculate how much money you pay salespeople, and then just figure out what your sales are. And for me, and I'm currently hiring a lot actually in my company. If you want to apply, you can always go on LinkedIn and click the hiring button on my website on LinkedIn there. But for me, the way I pay people is I usually give between 5 and 30% commission on what they sell. And when you work with me, because I cut my teeth in the hedge fund industry, it's a meritocracy. You eat what you kill. And there's no limit in terms of what a salesperson can make in general. I really believe in that. I don't believe in just, quota limits, et cetera. Yeah. So I don't believe in paying base salaries. I really believe in paying an unlimited amount of money when it comes to commissions. And that's how the hedge fund industry works as well. You eat what you kill. It's true meritocracy, the way it should be. Okay. All right. Next up, Eileen, how are you? Eileen was in one of the OGs in my first MBA degree program I launched last decade. Goodness, I'm getting old. You wrote, hey, Chris, I'm doing well on the complete options course. I do enjoy the lectures. Hope you're doing well. Thank you. And I appreciate that. Excellent. Eileen is from Atlanta. And I got this when my family and I visited her years ago when I saw the Coca-Cola factory. Yes. And yes, Coca-Cola initially was from a white powder. It's true. I got a tour of that course. They said that's true. Yeah. And Warren Buffett has owned this stock here since about 1990, and he's never selling. And Warren Buffett says this always. This is how long-term focused he is. He says, whenever I buy a stock, I always assume that the market's going to be closed for at least 10 years after I buy it. Obviously, it won't be closed, but that's how you got to think. You got to think long-term. In fact, if you bought Coca-Cola day one during the IPO many, many years ago, you'd be down 50% 1 year later. But of course, if you held on, you're worth a gazillion dollars today. The longer the view, the wiser the intention, always. Okay. All right, Michael, how are you? Good to see you. Okay, moving on to Harsh, who wrote, hi, Chris. I bought your Udemy course today. Thank you for that. Again, Udemy is a massive partner of mine, my most important indirect distribution channel. My MBA product is not available on Udemy, but a lot of my courses are. They mean the world to me. They're better than YouTube as well because of this. You see that? Okay, good. All right, so you wrote here, I bought your I bought your course on Udemy, and I'm currently going through it as I'm currently building an AI-based learning system. Thanks for the course. Absolutely. And the one you're probably referring to is one of the AI courses that I partnered with Luca on. Let me zoom out so you can see the more important award. Okay, they're both important, obviously, but this is the most important one here. All right. All right, next up, Lana Long. Great to see you. First time I see you on the call. I hope you join us again. Thank you. And again, if these backgrounds get distracting for you, just let me know. I thought I'd have a little bit of fun with it here today. So Lana wrote, I just want to thank you for the options course on Udemy. Great information indeed. Thank you. And I'm glad you're enjoying it. Thank you. Okay. And I am sorry about all the awful dad humor in it as well. Yeah. And if you meet me in real life, I am a tiny, tiny man. Look how small I look today. Yeah. All right. Moving on to Tommy, who wrote, if I'm looking to get hired, pardon me, at a particular company, how can you use quarterly or annual reports to understand the direction of the company is going in terms of business initiatives? Yeah, let me explain that to everybody on the call here. So whenever you're looking to invest in a company, you have to create your own financial model from scratch. Okay, and I provide you with this and all the tools and templates you need in the MBA degree program. So when you analyze a company, you look at 100 different factors. You look at qualitative research drivers, quantitative, like the total addressable market we talked about a couple minutes ago, and you also are going to look at the financials. Okay, so what you do is you build out the revenue, which is the top of the income statement, and then you build out the income statement itself, right? And so per the question, you model on a quarterly basis as well. And then what you do is, based on all of your estimates, you come up with an earnings estimate and value the company using PE, price to revenue, and DCF. Now, when it comes to quarterly revenue modeling, as you can see right here, the way you get those numbers is you get it directly from the company when they publish their quarterly results. Okay, so you can always go to investor relations for the company, or you can go to sec.gov to download what is called an 8K. And the 8K is an important press release which can include earnings. And companies release earnings 4 times per year. That's a quarterly basis. And what you're trying to do is you're entering all the numbers from the press release on the current financials for the quarter. And you're trying to see if your long-term EPS estimate in your financial model changes. So if results are better than expected and you enter all that information in your model, then your earnings per share estimate in a couple of years will go up a lot. It could. As a result, if you're valuing the company based on a price earnings multiple target of, say, I don't know, 20 times, and let's say in a couple of years, you have $1 in earnings, and 20 times $1 is $20 share price. Let's say you enter in all those numbers from the quarterly results, and they're so good that it pushes all your numbers up to $2 in earnings. Well, now your target price is 2 times $20, which is $40, 100% upside. And that's why sometimes you'll see that companies jump materially when they release earnings. Why does a company go up 30% when they release earnings sometimes, or down 30%? Well, it's usually, if it goes up 30%, it's because the analysts, the financial analysts that update their financial models like I just showed you, they enter in their numbers. and what happens is their target price goes up by 30%. So the stock goes up by 30% as well, and vice versa if it goes down. And sometimes whenever you enter your financial numbers into your financial model, although it looked like they beat earnings and revenue, the stock can go down. And the reason is because they might give bad guidance, meaning they'll tell you next quarter's numbers are going to be worse than expected, or something called deferred revenue went down a lot. I can go into more details than that if you want me to, but what I recommend you all do is this. Whenever a company reports earnings, I not only want you to enter all that information into your financial model, which I teach you in my MBA degree program, but more importantly, I want you to listen to the earnings call. And everybody can listen to earnings calls. And the way it usually works is a company releases earnings at, say, 4 p.m. New York time. They issue a press release. Then at 4:30 p.m., around that time, they do a webcast that anybody can join, including you, and you should. During that webcast, they start off by saying, we had another great quarter, even if they didn't. It's true. And then the CFO will provide guidance and talk about the numbers. And then most importantly, what will happen is the management team will take questions from the audience, meaning analysts from good firms like Morgan Stanley, UBS, Goldman Sachs, etc. And based on those questions that are asked, you update your financial model. So for example, if let's say Microsoft reported earnings and Kash Rangan, who's a good buddy of mine, who's the analyst at Goldman Sachs, asks the following question: how should we think about operating margins in 3 years? And let's just say the CFO of Microsoft says, well, our target is 45%. So what you'll do is you'll right click on operating margins in 3 years out, or EBITDA margins, in your financial model, and you'll write on the quarterly earnings call on this date, management said 40% or 45%, whatever it is, target. And that will help you. And do that for every single number that they provide you with in the financial model. Rinse, lather, repeat. Then you can put together the puzzle or the mosaic, so to speak, and eventually figure out the financials for the model. And if you have additional questions on that, let me know. It's finance is more of an art than a science. You know, accounting is a science. It's backwards looking, so you got to be precise. Finance, you're more of an artist. You're kind of forecasting the future. You're projecting what might happen. And you need to be very uncomfortable with uncertainty when it comes to finance. Yeah. All right. All right, next up, Eileen, whose last name is the best last name ever. Check this out. Her last name is Deo Gracias, which is Spanish for thank God. Yeah, and I thank God for my health today. Yeah. Actually, before I get out of bed every single day to get myself into a peak mental state, I recommend you do the same. I always thank God for 10 things in this order: Andrew, Matthew, Dylan, my wife Christine, my mom, my dad, my brother Jamie, the memory of my sister Katie, my little sister Elizabeth as well, and all of you, my students. I am grateful. Practice gratitude. Focus on being grateful for what you have, not what you want. Okay. Okay. So Eileen wrote, my next question is for my daughter. Okay. She's in her junior year of college. Congratulations. So is my son, actually. Yeah, he's third year at Berkeley. He just got an investment banking internship. Yeah. So she's in her third year of college and was hoping to get a job in intelligence. Yeah, I don't know anything about that topic. However, with the current goings on, she's thinking she might need to pivot and, hold on a second, there's continuation, and change her major. How do I help her navigate this? What would be a great option for her? She's heartbroken, but she still has time to make changes so she can be employable. Yeah, it's rough, I know, to get internships and whatnot when you're a junior year. Yeah, and then full-time jobs. Oof. So the most important thing I can say is it's really, really tough for anybody, I don't care how old or young you are, to get a job by just applying. Because every time you see a job opening online, you literally have a 1 in 250 chance of getting that job. And the person that gets the job knows somebody at the company. It's just the way it works. So those are the new rules. So step 1, have her create an amazing LinkedIn profile. And you're a platinum alumni. Have her come on to the Zoom call at 10 a.m. today if you want. And I can help her with her LinkedIn profile. Step 2, set up a bazillion networking meetings, right? And these meetings are not hard to set up. And if anybody wants to get access to a book on how to network for free, you can always go directly to my website. Okay, so go to harounmba.com, and then right at the bottom here, you can always download this networking book for free. Or you can sign up for my MBA degree program if you want. So I'm happy to actually have my team create your LinkedIn profile for you and teach you how to network on steroids. So I think what she needs to do is set up a lot of informational meetings with people that work in different industries. And then during these meetings, it might sound uncomfortable, but you have to do this. You bond first, and then towards the end, you have to ask for a job. And remember, closed mouths don't get fed. So you have to ask. Do that over and over and over again, and you'll be successful. And it's you only have to be right in business one time. And and Michael Jordan once said, "I failed over and over again in my career, and that's why I succeed." Asking or receive, it's prophetic. It's been true since the beginning of time. If she's not sure what she wants to do, or if my students on this webcast are not sure what you want to do with your careers, then what I would say is set up a ton of informational meeting with people that work in different industries, and then just ask them about a day in the life. And I don't care if you're 50 or 20, do this. And when you ask about what it's like to work in that industry, if it sounds like something you're passionate about, but then by all means go for it. And don't care what anybody thinks of you in your career either. Just do what you were meant to be doing. So for me, when I was your daughter's age, when I was a junior in McGill University back in 1993 in Montreal, when I was a little bit too much focused on this, to be honest. I had fun though. I set up a lot of informational meetings with lawyers. I didn't know what I wanted to do. My dad's a doctor. My brother's a doctor. They're both radiologists, which means they fix radios. Sorry. And so I thought, hey, maybe I don't know, be a lawyer or something. I don't want to be a doctor. And so I set up a lot of meetings with lawyers. I went down to Harvard Law as well. But in my meetings with lawyers, I'd have lunch with lawyers and whatnot, just by networking like crazy. I hated it. And after all these meetings, I asked myself, are you a jerk before you go to law school, or is that something they teach you in law school? So I didn't want to do that. It didn't seem like fun for me. So I went into technology and finance instead. So make sure you enjoy doing what you're doing. Otherwise, your life's going to be hell. Yeah. So before you figure out how to get a job, always ask yourself, why? Why do you want that job? Yeah. Okay. All right. Give me 1 second here. Okay. So Tommy J. Reminds me of Tommy John from baseball wrote, what is net present value and payback period? How do they calculate? Yeah, absolutely. So net present value means how much is future money worth today? Let me show you very quickly how this works with a spreadsheet. Okay, this will be real quick. Okay, so let's go here to Excel hell. Let me open up a new document here. And let me make it a bit bigger here. So let's say right now it's 2025. Okay, then next year is going to be 2026, 2027, 2028. Okay, whoops. That's good. Okay, good. All right, so let's say that today I'm going to give you get $1,000 every year. Okay, $1,000. So we're going to get $1,000 every single year. Okay, now of course the value of all these 4 years is $4,000, right? But if I give you $1,000 in 4 years, it's going to be worth less in 4 years because you could take that money today and invest it. Okay. And if that sounds elusive to you, think of it this way before we do this exercise. Okay. If I give you $100 today and the interest rate is 10%, how much are you going to have in 1 year? $110. Okay, good. Let's do the reverse of that. If I give you $110 in 1 year and I tell you the interest rate is 10%, what is that $110 worth today? Well, it's worth $100, sort of. So whenever you calculate NPV, you go equals net present value. And in Excel hell, when you open up brackets, it'll then say, hey, put stuff in. So what I'm going to do is I'm going to put an interest rate here of 10%, okay? 10%, comma, that's going to say, hey, man, select the values. So I'm going to select these values here and hit enter, which will automatically add the closed bracket. So the net present value of $4,000 is $3,169. I apologize about that. I get a lot of junk calls. Yeah. So the net present value of these 4 years here is $3,169. So if I made this 20%, do you think the NPV will be higher or lower? Lower, of course. Okay. So I'm going to go here. I'll hit enter, and it's lower, right? So let's say the interest rates were 0. What would the value be? Well, if interest rates were 0, there's nothing to discount, so it'd still be $4,000. There it is right there. 4,000. Okay. And if you have additional questions about that, please let me know. And thank you as always. Let's try a different backdrop here. Kind of like this one here, because I'm just getting over a cold. Yeah. This reminds me of my youth growing up in Canada. All right. I miss the winter. Okay. Next question from Tommy is, what is leverage buyout? And what is your opinion on this type of investment strategy? Yeah, a leverage buyout means use a lot of debt and get loans, hence the word leverage. and then buy a company that is undervalued. That's what it means. That's it. It's an LBO. And typically what happens is, a lot of firms like Henry Kravis's firm, KKR, and I met Henry Kravis when I was in business school. He came and guest lecture once. He's a good guy. But firms like KKR, what they'll do is they'll create massive funds of, billions of dollars. Then what they'll do is they'll borrow some money sometimes, and they'll take publicly traded companies private that are not doing well, and they'll use a lot of debt for it. Then they'll fix them and then sell it back to the market, rinse, rather repeat, and they make a big career out of this. Yeah, that's how it works. Now, if you want to learn more about leverage buyouts and private equity in general, two things I recommend. Number one, watch a movie called Other People's Money with Danny DeVito. Okay, and number two, you can read a great book that was published in the 80s called Barbarians at the Gate, which talks about one of the first notable American buyouts, RJR Nabisco. And Nabisco stands for the National Biscuit Company. Yeah, and Henry Kravis is in that book as well. All right. Give me 1 second here. And then Manas wrote, good morning, my dear mentor. Hope all is well. Thank you, Manas from Calcutta. Good to see you. You wrote, please drink ginger tea if you're not allergic. Thanks. And I've got, this is my antioxidant super shake here as well. And I didn't have time to make my shakes this week, so I just ordered these from Amazon Whole Paycheck. That's Whole Foods to the rest of us. Yeah. All right. Let me zoom in a little bit closer here. There we go. Okay. All right. Let me just get a little bit of air in here. Okay. Sergio, first time I see you on the call. Hope you join us again. Sergio wrote here, hey, Chris, with your Excel templates of valued companies, should it be enough by just filling in the cells, or should we also add more rows from the balance sheet, income statement, etc.? Yeah. So I provide you with everything, actually. I provide you with the balance sheet, cash flow statement, everything you need. When it comes to the income statement, I provide you with 2 revenue line items. You can always add a third or a fourth if a company has 3 or 4 revenue line items. Now, no two companies' financial statements are the same. They're quite different. So you gotta make slight changes always. Yeah. Take my templates as a guide. Yeah. Okay. Eileen wrote, you need some Pepacoa for your cough. Thank you. No, I've tried. I'm doing everything. Yeah. I'm at the point where the doctor told me in the hospital, just don't take any more flu medicine. Yeah. Apparently you're supposed to do it in the first day or two, and afterwards not. I don't know. The doctor hated me though, man. Like, I was joking around and he was so serious. Like, he said, you might be getting dizzy if you're having problems hearing. Are you having problems hearing? And I said to him, sorry? He said, are you having problems hearing? I said, what? He said, are you having? And I said, just kidding. Dude, he didn't laugh at all. Yeah. He hated me. Yeah. Okay. In the hospital, you don't get treated like a freaking customer in the hospital, man. Yeah. Okay. All right, next up, Farouk wrote, hey, Chris, I just bought your MBA course on Udemy, an entire MBA one course. Thank you, my 7-hour course. I published back in 2016. I'm so sorry. You wrote, but I've been too busy watching your YouTube videos and getting so much value for the last 2 days. Awesome. Thank you for that. I appreciate it. Thank you. And thank you, everybody, also for helping us to get to this milestone as well. And in terms of Udemy, also thank you from the bottom of my heart, Udemy, for helping me get to well over 1 million students. I got 1.5 or 1.6 now. Yeah. So Udemy is my most important indirect distribution channel. I generate more business on my website for my non-Udemy courses as well. Yeah. And the reason I say that, I don't mean to show off and stuff, but you never want, when you start a business, you never want to have more than 10% of revenue coming from one customer, so to speak. Yeah. Woo. Okay. I think I need to drink some water here. All right. Next up, we've got Manas, who wrote DeepSeek almost to NVIDIA. I think it was unnecessary euphoria because without NVIDIA, DeepSeek would not exist. Does this mean AI is super overvalued now because AI hasn't shown that much? No. So what's happened with NVIDIA because of DeepSeek is, a lot of companies, like AI companies, Google, Microsoft, OpenAI, etc. What they've done is they've created these AI platforms, and it's cost them, billions and billions of dollars to create it. Hi there. Let's see if it's alive. Yeah, it's not live today, right? They spent billions and billions of dollars to create it. And then what DeepSeek has done is, because of restrictions from the Biden administration on semiconductor purchases on new next generation chips in China, what they did was, instead of using the latest NVIDIA chips, what DeepSeek did was they used older NVIDIA chips, like 10,000 GPUs from circa 2021. They spent $6 million or so they said. And they built an AI product that is supposed to be as good as OpenAI's ChatGPT. And so investors are worried that, hey, you don't need to buy the next generation NVIDIA product in order to make badass AI products. Therefore, NVIDIA is not going to sell as much. One data point doesn't make a trend, though. I always think that better chips are better for the market longer term. It's kind of like saying years ago, we can all use the same generation of Intel chips. I got one here. This is a Pentium from 1994. We can just use 1994 based Pentium chips to build computers. It might work for basic stuff, but in the long run, with supercomputing, et cetera, and AGI, you're going to need the best next generation chips from NVIDIA. This is Intel, by the way. Yeah. So one data point doesn't make a trend, in my humble opinion. Now, what Mark Andreessen said, and Mark Andreessen, I think, is the smartest venture capitalist alive. He started Andreessen Horowitz. And I was on the board with Mark Andreessen in one of our portfolio companies, same board years ago. Nice guy, huge guy, massive, yeah. But what Mark Andreessen said was that DeepSeek is China's Sputnik. It's a Sputnik moment for AI. And I take what he says seriously, but again, one data point doesn't make a trend yet. Also, I wouldn't be surprised if the Trump administration, I don't know anything obviously, if they don't make some kind of concessions to the extent that American companies maybe cannot use DeepSeek, right? And so the entire TikTok legal case, which we'll find out about in about 2 months, will set a massive precedent in terms of, can you use DeepSeek in the United States? And I know a lot of people out there are saying, wait a second, Chris, you're cray-cray, because DeepSeek is open source, right? And yes, a lot of it is based actually on Meta's AI product, Loom, as well. But I still think the Trump administration could make concessions. Yeah, we'll see. All right. All right. Next up, Hash King wrote, can you please explain to me how people like Elon Musk can use the stock from his company as leverage for a loan in the form of a bank? Do they get to buy the stock back, or do they just get, yeah. So it's kind of like your house. Let's say that you paid off your house, okay? You don't owe any money on your mortgage, right? And then you're like, you know what? I kind of want to get an extra 200K so I can, I don't know, build an extension on my home, I don't know, a new wing or a new floor. So what you do is you approach a bank, you say, hey, can I get a mortgage? And they're like, sure. Here's a 30-year mortgage, small mortgage, $200,000. And you owe it back to us. Otherwise, we're going to take your house. You're like, okay, thank you. You take the 200K, and what you do is you build a wing or a new floor on your house. That's kind of what Elon Musk did with respect to using stock. It's just an asset class, right? So instead of using your house, for mortgage, you can use money for other stuff. He used his shares as collateral. Yeah, that's it. Yeah. Okay. Yeah, and once he pays off the loan, then the bank can't take his shares. Kind of like once you pay off your mortgage, the bank can't take your house, right? So you're not going to default. All right, Farouk wrote, congratulations, Chris. Thank you. Thank you. Congratulations to all of us. We did this together. Yeah. Whew. Okay. Next up, Sergio wrote, also, is it normal that I FAT totally different valuations from the 3 ways of valuing a company? FAT, I think you meant to write get. Okay, yeah. Yeah, it is normal. So what Sergio is referring to is whenever investment bankers will value a company and whenever equity analysts do investment research on a company, per the spreadsheet here, they tend to want to look at 3 different valuation methodologies: price to earnings, price to revenue, and discounted cash flow. And the reason is because you want to come up with, and this is just dummy data here, you want to come up with 3 different target prices. And the rationale is because one of your target prices might be way, way off. And so you want to take a blended average of all 3 target prices to get to the average target price right here. That's just good risk management, valuing companies 3 different ways. Now, the reality is, for a lot of IPOs and a lot of companies that people do due diligence on, it's usually DCF that is way, way off, but price to earnings and price to revenue are closer to the accurate target price. Yeah. And it's quite elusive valuing companies. If you can call a company to within 15% valuation in a given year, then you're a billionaire. That's right. Because the market could go up or down 15% for stuff outside of our control. Yeah. Yeah. My favorite is price to earnings always. All right. Ignatius Bose, how are you? First time I had a call with you was, I think it was yesterday. Great to meet you. Ignatius is from India. One of my new gold MBA product students. I asked him if he's related to Dr. Bose, who created Bose, and then who's a professor at MIT and gave the whole company away to MIT for free, which is nice, but he's not a good guy. Ignatius wrote, I have a few questions. Sure. Number 1, what constitutes non-cash items in the income statement and balance sheet? Yeah. So a non-cash item is something you don't pay cash for. So I'll give you an example. So if we have an income statement, and we have depreciation as an expense. So what depreciation is when you buy a car, every single year, you can depreciate it, right? Write off part of the value of the car over, say, 10 years or so. Now, you're not paying cash to anybody for that. You're just depreciating the expense. And the reason why people love depreciation, myself included, especially real estate investors, is because if you depreciate something like the house that you own, if it's an investment property, then you're going to pay less in taxes, right? So that's a non-cash expense. Depreciation is that. The same thing with stock options. When you give employees stock options, it's not really a cash expense, although you might expense it on your income statement, because it doesn't cost you any money to create new shares and give them to employees. And so what we do is when we're looking at how much free cash flow a company can generate, we tend to add back non-cash items. Yeah. So hopefully that makes sense to you. And when Donald Trump did his first televised debate against Hillary Clinton back in 2016, Hillary was making fun of him because she said, hey, look, you don't pay taxes, WTF, why the face? And he said, he's fully transparent. He said, of course I don't pay much in taxes because I depreciate. And, some of the most successful people and the richest people in the United States and globally, they own a lot of real estate. And because when you own real estate, investment properties, you can depreciate that, which means you pay a lot less in taxes. Let me show you what that means. Okay. So I have an elective that's exclusively available to my MBA degree program students. And that elective is my complete real estate course. So give me 1 second to open this up here, and I want to show you this to you. Complete real estate course. Okay. So when you invest in real estate, there's 5 reasons to invest. And we call that IDEAL, IDEAL. I is for income, to get income from it. D is for depreciation, so you pay less in taxes. That's right. And you can't depreciate your primary home, but you can for investment homes. E is for equity, Okay, you'll own equity, meaning ownership in the property. They'll go up over time. A is for appreciation. L is for leverage. Use responsible leverage. Okay, so a lot of people, what they'll do is they'll buy real estate investment properties. Okay, and then what they'll do is they'll pay a hell of a lot less in expenses and taxes because of this. Yeah, and so it's it's my dream that all my students make way more money from real estate than you do from real estate investment properties than you do from your base salary within 10 to 15 years. And it's something I teach in my MBA degree program. Now, in terms of cash versus non-cash expenses, companies quite often release two sets of financial statements. I can show you in real time if you want me to. And the two sets of financial statements are called GAAP and non-GAAP. GAAP is generally accepted accounting principles. It's the boring accounting stuff, which includes depreciation and all that stuff. Then there's non-GAAP, which backs non-GAAP, which backs out all the non-cash crap, like depreciation, stock options, amortization, etc. So when you create your financial models, it's easier for hedge funds to look at non-GAAP financial statements. I can go into more detail on that and show you a real-time example if you want me to. Okay, next question is, how should we evaluate publicly traded companies that have zero revenue and startups? Yeah. So what you want to do is you want to create a financial model for those companies to figure out what revenue and earnings they'll have in the long run. And then what you can do is you can value the companies based on your earnings estimates in 5 or 10 years. The reason people look at a price to revenue multiple as well as price to earnings is because a lot of companies are not yet profitable. Hence, you look at price to revenue or price to earnings if they are profitable. And for the rest of your life, whenever you think about any fraction ever again, I always want you to think of the denominator as being the number 1. So a company with a PE of 10 means for every $1 in earnings per share, investors are paying 10 times. So if that $1 earnings per share is growing faster, you'll pay more than 10 times. If it's growing slower, you'll pay less than 10 times. Same thing with price to revenue. So if a company has a price to revenue of 5 times, that means for every $1 in revenue and sales is the same thing. For every $1 in revenue, investors are paying 5 times that $1. Always seeing the denominator as being number 1. Yeah. Okay, next up, Manas wrote 100,000. Wow. Yeah, we all did it together. It's been a long time. You started watching me when I was maybe 15,000 subs or less. So great to be here. You've given me everything. Thank you for everything. Thank you. Thanks for being here. You inspire me. I still have that book that you published called Bond Before Business. Thank you. And everybody here should publish a book. If you want, you can go to this web address, harounmba.com/writebook. All lowercase write book. I don't ask for your email or anything, but I give you a template to write your book in 9-inch by 6-inch format. Yeah. You got to make it at least 140 pages, though, so you can have a spine, unlike your professor here. And the great thing about writing a book is you can bring that to informational meetings. You can bring it to, interviews. You can submit it to, university applications, whatever it is. Who does that? Nobody does that. And if you think that's too much work, then I ask you this. How badly do you want that job or that customer or to get into that school? Yeah. And the best way to think about it is you want to repurpose your content. So what I did for many years, actually, when I worked in venture capital, is I wrote 1 article per week on LinkedIn. And then after 2 years, I repurposed my 101 articles into a book. And then I made almost all the chapters here into courses. And the entire thing is an MBA degree program, so to speak, right? So it's kind of a manuscript for you 2.0, what you're going to do next in life. And you repurpose everything so you can work smarter and not harder. Kind of like what Nintendo's been doing since the beginning of time. They're a very profitable company because what they do is they take their older products, their 8-bit, 16-bit, 64-bit games, and they repurpose it on newer consoles, including the Switch 2 coming out later this year, which I'm going to buy because I'm a man-child. Unless GTA 6 comes out. And when GTA 6 comes out, y'all ain't going to see me for a while. I got to put a GTA 6 backdrop on here for a bit there. Okay. All right. Actually, you can see in the corner there, it's not really working. So what I did with the other backdrops, you'll see my hand will get cut off in a second. See my hand gets cut off here? Because there's too much light spilling over. Yeah. Okay. But I do have a cold, so I need the fireplace to be on here. Okay. Dude, I'm going to be 53 next week. And like I said 8 million times, the average life expectancy globally is 26 years longer today than it was back in the 1950s. So that means that you're all 26 years younger than you think you are. So I'm actually 26 for now, and I turn 27 next year. Yeah. Okay. I miss Canada. Okay. All right. Okay, give me 1 second. All right, Manos wrote, will China beat the world in AI? They're desperate anyway, and they're good, if not great. Is it a bigger challenge for big tech around the world? Why is Europe lagging? And what about the UK economy? Yeah, so a couple of things, right? So one data point doesn't make a trend. DeepSeek is great. That's one data point, okay? Now, in order to dominate AI, you need access to the best chips, GPUs. Right, and so the United States government under the Biden administration and the Trump administration believes this too. They're limiting, the AI tools that China can get, meaning the latest generation AI chips for national security reasons, so that the United States can be, light years ahead of China and the rest of the world from an AI perspective. In terms of Europe lagging behind, so if you look at the NASDAQ. Right, the number one company or number one country with respect to publicly listed companies in the NASDAQ, of course, it's the United States. Second is Israel, and then eventually, at some point, you have a bunch of European companies. There isn't really a vibrant chip market in Europe. I mean, you do have ARM, which kind of started in England. You have ASML in Europe as well. ASML stands for ASML. Hi, I'm 7.5. Sorry. But they don't really have a vibrant ecosystem. I will say that I think Ireland longer term might do quite well, only because in Ireland you only pay about 11% federal taxes. It's a great tax incentive program. But it's going to be tough for anybody to really compete with the United States. Yeah. Okay, but competition's a good thing for the consumer. So I'm glad that DeepSeek came out. Otherwise, I promise you, we would all get screwed on pricing when it comes to using ChatGPT. This is like introductory pricing. I'm sure that Sam, who's the quintessential capitalist, Sam Altman, is thinking about jacking prices up. Now he's thinking twice. And that's good for all of us. Think about competition is good for the consumer, right? So think about the iPhone. If Android didn't exist, we would be paying a massive amount of money every time we tried to upgrade our iOS. But it's free. And the younger generation, like my kids, they can't understand this, that I actually had to pay for software upgrades here. If I bring them over here, you'll see the green screen stops at the curtain there. See there? Yeah. Okay. Europe also has a lot of privacy laws as well, which is a good thing for all of us globally. If it weren't for Europe, especially Germany, then, if you look at street maps, all the license plates would be shown. But Europe has, there's much more regulation in Europe, so that too much regulation means less innovation. It's just, it is what it is. And the Trump administration, love him or hate him, I'm just going to call it like it is. He believes in deregulation. The less regulation there is, the better off companies do, because governments stay the heck out of the way. Yeah. Okay. But you can't just, like, a lot of people will say, why can't you just build Silicon Valley in Europe? Well, they've certainly tried that, in between Cambridge and Oxford. You can't do it. And I've written a lot of articles about this, too. And I've had a lot of governments reach out to me over the years, ask me for my advice on how would you build Silicon Valley in our country. You can't. It takes forever. Right. And it's not just a government thing. It's a social thing, too. So if you look at what's happened here in Silicon Valley and the Sputnik moment that occurred here, what happened was back in 1960, the Kennedy administration, was brokenhearted, and all Americans were brokenhearted because, the Soviets beat America to space with Sputnik. And so as a way to beat the Russians by putting the first person on the moon before the Russians do, what happened was the Kennedy administration created NASA. And NASA's goal was in the 1960s to get the first man on the moon. Now, in order to do that, you need a lot of money from the government as well as venture capital money. And so what you had to do is you had to actually create 100 transistors that are small enough so you can fit 100,000 transistors in the fuselage, the top part of the rocket. And so the first notable venture capital investment was made here in the San Francisco Bay Area. Okay, and that was done in a company called Fairchild Semiconductor. And Fairchild, they figured out how to get 100,000 transistors into a fuselage. And America got the first man on the moon in the late 60s. And what came out of Fairchild was a lot of fair children. So Fairchild was a big semiconductor company. It got big and bureaucratic. And so people left to start Intel, I guess, NVIDIA, ATI, a bunch of other companies. And around that vibrant semiconductor ecosystem, the hardware ecosystem was developed, HP, et cetera. Then the software industry, Oracle. And Project Oracle was a classified CIA database contract, right? And so Larry Ellison renamed his company Oracle because of that. So software grew around hardware. Then internet grew around software, right? So internet was kind of created by the U.S. government, DARPA, back in the 1960s. And the reason it was set up is in case there was, God forbid, nuclear war. If the East Coast can't communicate with the West Coast, the internet was set up. So if center of the United States, were to get hit, then you'd still have different ways to communicate between the East Coast and the West Coast. So all that stuff developed over decades. And one seminal moment on top of that, which led to this big bang here in Silicon Valley from innovation perspective, is the hippie movement. And that's a big deal. So what happened was in the 1960s, you had a lot of kids, right? My heroes. They were at Stanford, Stanford, Berkeley, San Francisco State, et cetera, here in the Bay Area. And all they knew in their lives was war. Their mothers and fathers died in World War II. Their grandparents died in World War I. And their brothers were getting decimated in Vietnam, and maybe their uncles or aunts, whatever, as well in Korea. And they were pissed off, rightly so, that generation in the 60s. Especially students at Stanford were really mad because 50% of Stanford's R&D budget was classified government military weapons research. And so, Stanford said sorry, and they pushed Stanford Research Institute. They rebranded as SRI. They pushed it off-site. And in the late 60s, students took over, a lot of universities, right? So even Columbia and New York City, where I went to school, not in the 60s, so I'm not that old. But what happened was Stanford and Berkeley, the students took over the administration buildings. And eventually the governments here on the left coast, the West Coast, I hate taxes here, sorry. The governments here and the administration of the university said, we're sorry. That's a Canadian saying sorry. Sorry, they said we're sorry. That's how Americans say it. And what happened was open source was born. And open source means that you share ideas, right? You share love. You share everything. Hey, man, don't worry about it. Make love, not war, and all that stuff. So all that stuff I just explained, the social movement, as well as the Sputnik moment, that took a long time. And there's a bit of luck involved to get all of that to occur at the same time. So it's really, really hard for, other regions in the world to do this, right? United Kingdom, you can't do this, right? It's hard. Yeah. And so I'm not saying that the American system is better. It's kind of luck. It's like they just had that entire thing occur to them. Plus, they were isolationists here in the United States, right? U.S. is blessed to be, covered by two massive oceans on both sides. So anyway, that's it. Yeah, and there's so again, I don't want to come across as somebody saying the U.S. is rah better than everybody, because 50% of all founders here in the Bay Area where I live in Silicon Valley, founders and engineers were born overseas. But one thing I did discover when I started teaching during the evenings here in the San Francisco Bay Area years ago when I worked at venture capital, is that American students, regardless of where they were born, because half my students were born overseas, American students are number one in the world in the most important economic category that nobody talks about, which is confidence. And with confidence, you can sell. With confidence, you can sell a dream. with confidence, you can make something really boring and mundane like cloud computing sound awesome. Kind of like Mark Benioff has done. Kind of like how Steve Jobs was able to sell. And so the most important skill set I think that we can all have in our careers is the ability to sell and inspire others. And that's the first thing I teach in my MBA degree program. Yeah. Okay. I know you're thinking, holy, Chris, I asked you for a yes or no question. You gave me a freaking encyclopedia. Okay. All right. My marketing person wants me to ask everybody to click the like button, please. Or dislike, whatever you want. Just one or the other. Yeah. All right. This is fun. The way you know you found your passion in life is when you're sick, which I am, you still love doing what you're doing, and you can't wait to get back to it. So when I was getting my IV in the hospital, and some of you are like this, you know what that is? That's the world's smallest violin. When I was getting my IV the other day in the hospital, and I'm fine, I was messaging students and all that stuff. But yeah. All right. My job is to help you find your passions. Yeah. All right. All right. Farhat Malik wrote, how can I make hedge fund market maker model? How much will it cost? Yeah. So in my MBA degree program, I also have a Python course, teach you everything about Excel, which can help you with financial modeling as well as machine learning. You might want to check that out. That might help. In terms of how much will it cost, it's hard, man. So I advise a lot of top hedge funds around the world, right? It's part of my consulting business, and you have to have a lot of computer science PhDs in order to do that. Let me show you. Okay. All right. So, for example, Renaissance Technologies is the number one. It's the number one quant-based hedge fund in history. Okay. And it was founded by a brilliant man named Jim Simmons. I'm going to show you the quality of people they have. They have like 90 PhDs. Let's go to About. Yeah, 90 PhDs in mathematics, physics, computer science. And you'll notice there's nothing about finance here. Right, so you got to really, really thoroughly understand computer science, mathematics, and physics. A little bit less so finance in order to do it. And what Jim Simmons did, God bless me, passed away about 12 months ago, was his firm, and he used to work at the NSA, National Security Agency in the United States. He left the NSA in the early 1980s, and he founded Renaissance. And his gross adjusted return, meaning before fees, this is crazy, okay? It's about 66% since the 1980s. Cray. And he is basically the first notable AI hedge fund, right? He's used machine learning, which is a subset of AI, since the 1980s. So how does he do it? Well, we'll never know. We'll never know what's in his algorithms. But he probably has several thousand Linux servers running in parallel, okay, heavily guarded. And I'll give you a silly example. But they take a lot of inputs, data inputs, and then pick stocks. So here's a silly example. If it's raining a lot in a certain region, then short restaurant stocks because people don't go out to dinner as much when it's raining, that sort of thing. Now, there's tons and tons of different inputs that he uses to pick stocks, or his firm, I should say. Yeah. So, but you have to thoroughly backtest all this stuff. Now, what I recommend if you're interested in this sort of thing, what I recommend doing is, first of all, learning Python, and then also thoroughly learning Microsoft Excel. And then backtest your models and just use regression analysis, which is a subset of machine learning, which is a subset of AI. And I would start with something called behavioral finance. And behavioral finance means, as the term sounds, use behavior to pick stocks in finance. And if you want to do research on that, there's a really smart guy, Dick Fuller, and Richard Taylor, who won a Nobel Prize in finance several years ago. They run a great company out here in the Bay Area. My best friend is one of the portfolio managers there, called Fuller and Taylor. And Fuller and Taylor, what they do is they use behavioral finance in order to thoroughly understand, when executives buy stocks, what happens to their stocks a year later. You can backtest this, right? By looking at what's called Form 4. So I'll give you an example. So Elon Musk, in Q1 of 2020, when the price of oil was negative $30, people were freaking out then. What Elon Musk did was he bought a ton of shares in Tesla because Tesla was down a lot, and then he sold it in late 2021, when the market peaked temporarily. But you can always backtest this stuff. That's called behavioral finance. And I used to do it when I worked in the hedge fund industry with Activision, ATVI, when it was publicly traded. I used to meet with Bobby Kotick, who's the CEO, founder of Activision before Microsoft bought them. I noticed, and this is all publicly disclosed, that whenever he bought a lot of shares in Activision, the stock was up a lot a year later, and vice versa. And that's behavioral finance. You can do that. So you can start modeling that and backtest that as well by looking at Form 4s, okay, to see which executives buy and sell shares and see if that makes an impact. You can make a lot of money this way, okay? It'll take a while to figure this out, but I promise you can make money this way. And I remember, just a quick little side note, when I used to meet with Bobby Kotick, this funny guy, I used to ask him, I see that you're selling a lot of shares. How should we think about the implications for your company in the long run? And his answer would always be something silly like, well, what do you want me to do? My wife, she has expensive tastes. Okay. Hey, Claudio, how are you? Okay, give me 1 second here, guys. Oof, lots of questions, yeah. All right. And if I can't answer your questions today, you can always join me if you're in my gold, platinum, silver, diamond MBA program. You can join me on the hours of Zoom calls I have later today, or you can ask me next week. Let me show you what that looks like. So a lot of people are like, well, what do your Zoom sessions look like? Let me show you behind the scenes here. So let's go here. Let's go to my website so I can show you. Let's just go here to YouTube. Okay, hold on a second. YouTube Studio. So when I do these Zoom calls, okay, hold on a second. Let's go to Content, Live. This will be an unlisted one. I'll show you. Yeah, let me show you that last week's 1 hour silver call. So here's what it looks like.
The issue is, it's a marathon. So in the early days, you're not going to make much money.
Yeah, so I have students from all over the world that they'll ask questions here, from Texas, Florida, Netherlands, South Africa, a doctor in Arizona, Canada, Greece, etc. So that's what it looks like. And you can ask me any questions, and you ask me to go through your your LinkedIn profile. I'll go through it. Ask me to update a financial model. I'll do it. I was wearing a coat last week, so I started getting sick. All right, let me move on to more questions. Thank you. All right. Oh, I like this backdrop here. Okay. Okay, Manas wrote, my mentor MST, or MSTR, MicroStrategy, yeah. So MicroStrategy is going all in on Bitcoin. They're offering 8% security, and they will buy more Bitcoin from proceeds. How safe is that? The doldrums in AI and tech, yeah. So Saylor is the CEO there. So I used to invest a lot, long and short, especially short, in MicroStrategy. When I worked in the hedge fund industry, we used to call it MicroTragedy. And I remember once he got onto an earnings call, quarterly earnings call, Saylor, and some analysts asked a question that he didn't like. And he basically said something like this. I can't remember exactly. I'm going to paraphrase it, but he said, I don't know if I really like that question. This call's over. Hung up. And that was it. It's pretty funny. Yeah. But my thoughts on him going all in on Bitcoin. Yeah, he's made money. He'll probably make money. But I think it's kind of financially irresponsible, fiscally not conservative, because his company is a software company. It's people weren't investing in his company just for Bitcoin. It is what it is. It's worked out well, but I don't know. Whenever I look at a balance sheet and assets, I look at cash and short-term investments. Cash and short-term investments are supposed to be something that that is not volatile, like commercial paper, for example. Okay. All right. Next up, Miss T, Tanya from Toronto, one of my platinum alumni. And Tanya, I'm looking forward to seeing you again this September. For those of you in my gold, platinum, and diamond program, this September 26, 27, 28, I've got a 3-day event here in the Bay Area. It's going to be fun. Graduation event or networking event. You don't have to graduate to attend. And then this year we're gonna go to Napa Valley together as well. I'm looking forward to seeing you. Let me switch over to the Brooklyn Bridge here. Yeah. Okay. And you wrote, I want to join the new class you started. I have great news. I got accepted to the private equity program at Oxford University. Excellent. Yay. I'm so proud of you. That is awesome. That is so awesome. Very cool. Very cool. Actually, I want to hear all about it. Yeah. In terms of get your grandfathered into my new gold program that started on Monday. So just email support at harounventures.com. And congratulations again. I'm very happy for you. And then you wrote, my goal of a private equity fund is finally going to happen by the grace of God. Awesome. Awesome. Very happy for you. If I can humbly help you in any way with that, please let me know. It costs you nothing because you joined Platinum years ago. Yeah. Nicely done. Okay. Moving on to Sergio, who wrote, in the industry, does it look fine if you text a portfolio manager sharing your CV, etc., in LinkedIn to ask for a job, or is it seen as not cool because you don't know them in person? Yeah, never ever text somebody or email them, ask them for a job ever. You always want to bond before business, right? So you want to meet with them in person first. And then what you want to do is after you get to know them in that meeting, then you can ask them. You can always share your resume, right? But I want you to be innovative and different about it. So let me show you a quick trick here. So what you can always do is you can write, this is for my MBA degree program students, you can write, this is dummy data here, just fill in all 730 steps in here. And this will all export into this one pager here, okay, which has, fundamentals, valuation, technical analysis. And you can print this and put this on the other side of your resume if you want to, right? So you print this out on the other side of your resume when you meet them in person. Or you can even save this as PDF and send portfolio managers after you meet with them this one page write up every week, rinse, lather, repeat until you get hired. Yeah. Okay. All right. Again, if this is overkill, I'm trying to mix it up here and have fun with it. Let me know, please. Yeah. And I think I prefer the fireplace one better. Yeah. How fun is that, huh? All right. You got to have fun when you work and be creative when you work. Always. Yeah. All right. A little bit chilly today in the Bay Area, like usual. All right. All right, JK, how are you? JK recently joined my gold or platinum program, my 10th one-year program, which is sold out for anybody that's interested in applying it. JK wrote, great to see you back. FYI, radiologists are often referred to as almost a doctor. Oh, I love it. Okay. Oh, dude, like dentists, right? And I'm dying. It's killing me. I want to quote one of my favorite lines from The Hangover, but I can't because I'll get canceled. Yeah. Okay. All right. Next up, Jim Culture. It's been a while. How you doing? Wrote, how would you go about making a pro forma P&L for a company before and after acquiring a smaller firm? Yeah. So what I would do is, first of all, look at the historical financials, okay, which you can get from the annual report or from their audited financials, okay. And then what I would do is I would spend most of your time, if you can, spend most of your time focused on forecasting revenue. Okay, so give me 1 second. I've got my financials over here. Okay. So, with your financials, what you can do is spend most of your time focused on forecasting the financial statements. Okay, so revenue, and then minus all your other expense items, this is going to look kind of ridiculous here, right? And once you forecast, once you figure out what revenue is, the red items here are expenses, right? So figure out what revenue is, forecast into the future, and the other items, the red items, expenses become a percent of revenue, okay? And the reason why I'm standing up and showing you this is because of this. Watch this. This is going to stand out there. This is revenue, okay? So if I tell you that revenue is growing like this, every year, what's the next year going to be? Right there. What's the next year going to be? Probably there. So an object in motion will stay in motion. So figure out what revenue is what the revenue is going to be for the next couple of years. And then once you do that, once you figure that out, then your red items, meaning the expense items, become a percent of revenue, right? It's easy to forecast. Then what you're going to do is you're going to layer on top of that the same methodology for the company they're acquiring, okay? And then once you do that for the company they're acquiring, you add them both together. And that way you can figure out what the growth is and the non-organic growth, what the step up when they made that acquisition. And if you don't do that, if you don't measure them separately, then you're going to make the mistake of assuming that one step up in growth is repeatable every year. And the reason that a lot of companies blow up is because financial analysts don't forecast acquired revenue that way. And I'll give you a great example. So if we go back to 2000, I think it's 2014 or 15. 2015, what happened was LinkedIn bought Udemy competitor Lynda, okay? And investors loved it, right? It was a big acquisition. They spent over $1 billion. Investors loved it because it made revenue go up. And then 1 year later in 2016, investors made a mistake of assuming that revenue was going to continue to grow. They didn't model it properly. And because of that and, other reasons too, LinkedIn missed earnings. And the stock blew up. I think it was the summer 2016. And so LinkedIn pulled back materially. And as a result, the investment bankers from Microsoft called them, said, hey, man, buy LinkedIn. It, could make Outlook relevant longer term. Yeah. So that's how I think about it. And that's the danger of not modeling or forecasting non-organic growth properly. It's deadly. It's deadly. Yeah. Yeah. And acquisitions can be a double-edged sword. So for example, for Oracle, Safra Katz, who is, a financial genius, what she did was she architected Oracle, and she used to be an investment banker at DLJ for years back. I think it was the 90s. But what she did was she has Oracle do a massive acquisition every year, and it's a double-edged sword because if you don't do a massive acquisition every year, then it looks like revenue growth organically is slowing too much. So they have to buy a lot of companies. And so Oracle back in 2003 did a hostile acquisition. I remember investing in this in PeopleSoft, and investors kind of liked it, and then growth slowed, and they had to buy, Hyperion, Sun Micro in early 09, NetSuite, Rinse Lather Repeat, Alfred's company, BEA, etc. Yeah. So always look at organic growth and non-organic growth and try to model them separately if you possibly can. Okay. All right. All right. Okay. Abdullah wrote here, I'm seeing a lot of modern age PE, meaning private equity firms, that don't like the idea of LBOs, meaning leverage buyouts, and putting a lot of debt in the business and stressing it instead of just growing it with heavy margins and ROAS. Yeah. It all depends. So it depends what interest rates are, right? If interest rates are close to zero, then it makes a lot of sense to use tons of debt, right? Because cash is basically free. But as interest rates rise, people tend to shy away from, LBOs. Yeah. All right, next question is, what is a 529 account? What's the purpose? Other alternatives? Yeah, so 529, it's an educational savings account. And the best way to think about it is, in the United States, you've got the 401k. Okay, so 401k means you can invest, around 22K per year, tax-free for when you retire. A 529 is similar to that, but it's for education. And so what I did with my three sons is I maxed out the retirement, the 529 educational savings account for my kids. And so I think it's about 15 grand per year you can do, right? And so I did this for my kids. And now that Andrew is he's at Berkeley, he's using that money as well to pay for university. And when he takes that money out, what makes it better than a 401k is that it's tax-free if it's used for university, right? And then he'll have extra money left over, which he doesn't know about. Keep that between you and me and whoever else you tell, okay? But he'll have extra money left over, and he'll be able to use that to buy a house or something. And then he'll pay taxes on it at that point. So I maxed out humbly for all three kids. And everybody should try to do this if you can. You can't do it every year. Times are tough, right? So anyway. And if all you did was this, let me talk about 401k and 529 savings really quickly, or educational savings accounts. So if all you did was you took about 20 grand each year, which is a lot, we can't do it every year, times are tough, and you put that in the S&P 500 every year for 20 years, and if the S&P is up, about 15% on average, which I think it will be on average every year going forward, of course it will be down years. If all you did was you put about 20K and you put it in the S&P 500 every year, the index fund, the ticker VOO, then in 20 years, you'll have over $1 million. If your spouse did it, then you'd have over $2 million. If you have a kid and you did it for 18 years, the 15 grand for the 529 ESA educational savings account, then, for 18 years from that kid, you'll have about $700K. So if you did it for 3 kids, you have $2.1 million. If you did it for 3 kids for 18 years and yourself and your spouse for 20 years, you have $4.1 million. And so out of sight is out of mind. It's a great tax benefit for you to use. Of course, we can't do it every single year, but you always want to contribute as much as you can and certainly live below your means. So you can. Yeah. And the best way to do it is to always have money come out of your account before it hits your paycheck, and put it directly in your 401k or register a retirement savings program if you're in Canada, for example. And Warren Buffett said you always want to spend what is left after saving instead of saving what is left after spending. It all adds up. Yeah. Okay. And let me show you a really, really quick example of this in action. Okay, so what I'm going to do is I'm going to go over here to my complete real estate elective that all my MBA students have access to. All right, so let's say that you spend $1,000 a month, okay, on rent, and let's say you do that for 50 years, okay. So that means that you're going to spend this much money. You're going to do that times 12 months times 50 years, okay. Okay, come on, work. Good. So you're spending 600 grand, okay, on rent over 50 years. So if instead of wasting that money on rent, you bought a place or you invest it in stocks, and let's say that the average return was 15%, okay, for 50 years, right? And I know it's crazy high, but I want to just make an example here. How much money do you think that 600 grand be worth? Take a guess. It's going to be more than 600 grand, right? But just take a guess. You ready for the answer? This will blow your mind away when you think about savings. Let me move this green box out of the way. That is $138 million. $138 million. Okay? Crazy. That's why you have to max out your educational savings account, meaning your 529, as well as your 401k, and do the best you can to buy a place as soon as you can. And for me, it took me until my 30s before I could afford my first apartment in New York City. It was expensive. And you always want to buy when everyone else is freaking out. And I bought my first place in New York. It was right after 9/11. It felt so uncomfortable to buy. And that is when you buy. Because if you buy the same stock that everybody loves right now, or any investment class. Everybody loves it. There aren't that many incremental investors to buy and push it higher. Right? You got to be fearful when others are greedy, and greedy when others are fearful. And Warren Buffett, I love this quote, man. He said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Think about that. Okay. All right, guys. I'm gonna take a very quick break. Here's my son and I right here. I'll be right back. Thank you. One speech can change your life. You will learn to love public speaking. One speech. Oh, hey there. One speech can change your life. You can. Oh, hey, I'll be with you in a second, okay? You will learn to love public speaking. Oh, hey, actually, I'm practicing for my speech. Can I rehearse it with you, and you can maybe let me know what you think? Okay, thanks. One speech can change your life and touch the hearts of so many people around you, whether you realize it or not. And this assumes you have no public speaking experience at all. No problem. I used to be terrified of public speaking, much more than you. I'd rather have been here than up there. For example, when I was in business school at Columbia University, as well as during the training program at Goldman Sachs, I asked more questions than my peers did because I was terrified of being put on the spot. But now I feel alive while giving speeches. You know, people might forget what you said, but they'll never forget how you made them feel. This course is not based on theory. It's based on real practical experience. I've given a TEDx talk, numerous keynote presentations, and graduation speeches in front of hundreds of people. I've given numerous business presentations, and I've been interviewed by many media publications. You will learn to love public speaking on the spot with no preparation. So that one incredible speech can be the bridge between where you are now and where you want to be. It's almost impossible to achieve all of your goals in life without learning how to master public speaking. Anyone that's had a significant influence on the world, from Dr. Martin Luther King to Malala, Bill Gates, or Steve Jobs, all had one thing in common. They've all had the ability to communicate with large groups of people. In this course, I will include 25 different templates for every type of speech occasion, from a personal speech at a wedding to a business presentation using Skype. This course will teach you everything there is to know about public speaking. One speech can change your life and the lives of so many people around you. Life all comes down to a few short moments. So how was that?
This was okay, Dad. Can we go home now?
Sure thing, bud. All right, let's go. So I've got to take him home, but I'll see you in class. Thanks. So how was everything? Had a good day? Yeah. Well, thank you everybody for letting me take that break. Can you believe I made that trailer 8 years ago? I put it on Udemy when I had next to no students. So anyway, I want to thank Udemy and all my people who take my Udemy courses over the years as well. Okay, let me get to more questions here. Thanks. 8 years ago. That's what I looked like when I was younger. The older I get, the better I was. Remember that. Yeah. And here's a quote to make your day. The second you're born, you're slowly dying every day. Okay. All this goodwill I built up, I'm going to lose, with one stupid fucking comment. Okay? I'm just kidding. Sorry for swearing. Sort of. All right, next up, Superfluxfly wrote, what do you think of Trump and his economic plan? Yeah. So I'm a big proponent of small government. So my favorite president, and the reason why I'm in the United States, is because of Ronald Reagan. I grew up, watching him as a proud Canadian, and watching him take on big bad communism. He's a firm believer in democracy. So I'm a big fan of Ronald Reagan. And Ronald Reagan believed in small government as well. And I remember when Reagan was president when I was a kid, all the air traffic controllers, threatened to go on strike, and they went on strike. And then, what Reagan did was he fired all. Yeah. So I believe in small government. I really do. And so when it comes to the Department of Government Efficiency, yeah, I like small government. I like small regulation as well. I don't want government, coming to my kitchen telling me what I can and can't do. It's one of the reasons why I refuse in getting my MBA degree program accredited. I can make a lot more money that way. But I don't want no government, putting their finger in my pie and telling me what I can and can't teach. So I like the fact that Trump is focusing on smaller government. I also like the fact that Trump is focusing on lower taxes. I believe lower taxes, helps a vibrant economy. I really do. One thing I'm a bit worried about, to be intellectually honest, is tariffs. Tariffs led to the Great Depression. I don't think we're going to be in a Great Depression by any means. I think the economy is going to do quite well. But I don't think Trump is going to do anything too extreme that would derail the financial markets. And so I believe that the real-time judge of how Trump is doing as a president is the stock market. And I don't think he's going to do anything to make the markets crash. And if he does, he'll reverse course very quickly. When it comes to wanting to put up tariffs of, and look, I'm not saying he's great and other presidents suck and all that stuff. I'm going to stay neutral here. Just talk about his economic policies. But one thing that does concern me is the tariffs being too high, especially on Canada. I'm a very proud Canadian. I don't think he's going to do anything too egregious, to be honest. But we have to understand that the way that, love him or hate him, the way that Donald Trump works is he gets a deal done. So the way it usually works when two people are negotiating is party A says, I want this. Party B says, I want this. They meet here. The way it works with Trump and always has is party A says this, and then Trump says, I want this. And they maybe meet here. And that's what Trump wanted the whole time. So love him or hate him, he can get a deal done. Yeah. And sometimes, the way that he gets these deals done might seem extreme, but it works. Look what happened with Colombia. They refused to take, a couple airplanes full of criminals they was trying to deport. And so, they said, no, we're not taking them. And Trump said, fine. And as of right now, there's 25% tariffs on stuff that's being exported to Colombia. And a week from now, it'll be 50%. And Colombia reversed course pretty quickly. Yeah. So what I do love that Trump is doing, though, is the war on fentanyl and drugs. And if it hasn't happened to you yet, it will at some point where you lose somebody you love or a family member because of fentanyl or opioids or other drugs. So he's taking this on, and God bless him for it. And if all these threats of tariffs with Mexico and Canada, my beloved Canada, if it does one thing, which is stops the illegal flow of drugs, then God bless him for that. Yeah. So yeah. Again, he's very extreme the way that he negotiates, but he does get a deal done. Yeah. Love him or hate him, it is what it is. Yeah. Yeah. Okay. All right. But I tell you, man, the next 4 years, there's certainly be no dearth of interesting news to watch. Yeah. Okay. All right. Next up, Miss T wrote, Chris, oh no, I just got diagnosed with pre-diabetes. And I've been for 6 days on the carnivore diet through my Jamaican herbalist near me in Scarborough, close to Toronto, where I grew up too. My family doctor just told me that I can reverse it. Yeah. I will pray for you, and I'm glad to hear you think you can reverse it as well. I do a lot of biohacking myself. I'm far from perfect, but I think a lot of the stuff I've done is at least started to slow down aging, and help me with, any genetic predisposition I have. And, many years ago, I got my DNA sequenced. And the reason I did it was because we all of us in our families, I recommend everybody talk to your older aunts, uncles, parents, if they're still around, grandparents, etc., and ask them what diseases they got. Then what I want you to do is I want you to do your own research on how to reduce the probability you'll have of getting those diseases through vitamins or nutrition or diet, whatever it is. And I did that years ago. I had my DNA sequence as well, which helped me with it. And my DNA sequence said that there's a 67% probability that in my life, in my 60s, I'll get something called AMD, or age-related macular degeneration, where my eyesight will go down. And my grandfather had that as well. And so what I do is I take a benign organic zinc pill every day that my doctor told me to do, so that my eyes don't deteriorate. And I biohack a lot, and I recommend everybody do that as well. Yeah. Okay. All right. Okay. And then JK wrote, give me a doctor with competence, not just confidence, over a bedside manner any day. Yeah. And always, like, you want to self-diagnose, right? Obviously talk to your doctor and stuff, but you got to do your own research always. And if a doctor, tells you to do something that you don't feel comfortable with, get a second and a third opinion. I'm not going all RFK Jr. on you, but there's some merit to it as well. Yeah. Okay. All right. Next up, Dane wrote, Heartland is a long-running series created in Canada now with 18 seasons online. Every episode is heartwarming and wonderful. One of the executive producers is named Haroun. Any relation? No. But I'm going to take a screen print of that. And I'll check out that series. Thank you. Yeah. Okay. And if anybody's wondering my ethnic background, so my dad is from Egypt. He's a Coptic Christian who left he left Egypt in, I think it was 1967. I think it was around that war against Israel. And what he did was he didn't want to fight in that war. And so he paid $20 to bribe an army official to fail his eye physical, so he can come to Canada. Yeah. So my dad is he's Egyptian, so I'm half Egyptian. My mom is she's half Lebanese, and then the other half is Scottish, Irish, a little bit of French, and all that stuff. And I have green eyes because of my Irish grandmother, and as a result, that's why I have blue behind me. I can't do green screen. And anybody with Irish roots in Hollywood, they can't do a green screen. They have to do blue screen, right? And a lot of times these Irish people in movies, they have to wear contact lenses, right? So you can see right here, that's actually blue back there, and then that's why I do blue. And then my wife, if you guys are curious, so my kids are a wonderful mixture. And I'll hold it over here. So see the green screen? I stopped it automatically right there at the curtain. See there? Yeah. My wife is half Greek, and the other half is Palestinian. So my kids are United Nations. Yeah. All right. And then Farouk wrote, are you using Udemy as part of your funnel? Yeah. So what I do is, whenever somebody buys one of my courses, I have a survey, monkey survey, that asks, how did you hear about me? And I think it's about 10 to 15% of people hear about me through Udemy. It used to be a lot higher. But a lot of people hear about me through YouTube or other sources as well. Yeah. Okay. And if anybody asks me specific questions about Udemy, I did sign an NDA with the company years ago. I love the company. All right. And JK wrote, Chesapeake Bay JK here. I'd love to switch geographic locations with you for a month. Plenty of snow here. No, I miss it, man. I really, really miss the snow. I think depression is a lot lower in countries where you have seasonal changes because there's something to look forward to all the time. Yeah. Okay, Sanjay wrote, "Hey Chris, hope you're doing well. I'm feeling great now. Thank you. And Sanjay wrote, I was wondering how long do hedge funds hold their stocks for, just in months or years? And also, with simple example, can you explain HFT trading and also quant arbitrage algorithmic trading? Sure, I'll do my best. So in terms of how long do hedge funds own stocks for, so it all depends, right? It all depends on the strategy of the underlying hedge fund. I would say that the more successful hedge funds are longer term focused, right? There's a big misconception that they're all day traders. They're not. And a lot of the more successful hedge funds cut their teeth by learning from Julian Robertson, who started Tiger back in the 1980s. And a lot of these portfolio managers and analysts that worked for Julian spun off to start their own companies. And those are called Tiger Cubs, like Maverick. There's tons of them out there. Blue Ridge, just do a search for them. And the reason I mention that is they tend to think longer term like Julian Robertson did. So they make 3 to 5 year bets, even if they don't hold their positions for that long. Yeah. Now, when it comes to holding positions for quantitative-based hedge funds, quantitative-based funds, what they do is a lot of times they use computers to pick stocks to, buy or sell sometimes very quickly based on certain parameters, like if a stock is overbought or oversold or other inputs, etc. And they'll use statistical engines from companies like Barra, B-A-R-R-A, and they'll create their own machine learning based models as well. And in that case, the amount of time they hold on to these stocks can be quite low. Yeah. But most people can't figure that out. And high frequency trading basically is trading really, really fast, looking for inefficiencies in the marketplace, etc. An example of this might be a company that is listed in 2 markets, SAP, which is listed, it's a Waldorf-based German software company. They're listed on the Deutsche Börse, and they're listed in the New York Stock Exchange. And if the ADR, American Depository Receipt for SAP in the United States, the New York Stock Exchange, is mispriced compared to the German one, then they might go short the German one, long the American one, etc. Yeah, but markets are pretty efficient. Arbitrage in general, you asked about quant arbitrage. It might be something like that, actually. So basically finding an inefficiency, a mispriced asset, and then going short the overpriced, overvalued, and long the undervalued to kind of profit off of that. A lot of hedge funds will have what's called an ED or event-driven strategy. That will look at mispriced assets. So what event-driven hedge funds do, and I've worked on a lot of deals like this, is if one company is buying another company, they'll go short the company making the acquisition and long the underlying company that's being acquired until the spread is closed. And let me give you an example. So let's say a stock is trading at $9 or $10. The stock is trading at $10. And a company wants to acquire it for a 30% premium. So what happens is that stock that's $10 usually doesn't go up to $13 right away at 30%. It usually goes up, I'll make this up, $12.75. And so there's 25 cents left. And the reason why it doesn't go up to $13 right away is because some people in the marketplace believe that deal won't go through. Like the government might not approve it, or shareholders might not approve it. And so usually event-driven analysts and portfolio managers, a lot of times they have law degrees, or they might have worked at the DOJ, and they work at big hedge funds. And they'll do research to decide if that deal will go through. And if they think the deal will go through, then what will happen is that hedge fund will go long the stock at $12.75 and short the acquirer. Okay. And then eventually, if the deal goes through, that arbitrage gap will close from $12.75 to $13, right? And they're hedged by shorting this guy and being long this, and they make money off that spread. If the deal doesn't go through, they lose a killing. but they usually use complex option strategies to mitigate any sort of downside if the deal gets derailed. And one reason a deal might go through is if the Department of Justice says, hey, you're getting too powerful by doing this, so we're not approving the deal. Yeah. And that can often, take 6 months or so. And also another reason why the stock might be at $12.75 and not $13 right away is because the cost of capital, right? If the deal's not going to get approved for at least 6 months, but you can put your money in the bank and make, I don't know, a couple percent. Yeah. And if you have follow-up questions about that, let me know, please. Okay. All right. And then you wrote, how long do funds own each stock for in an arbitrage? Yeah, it all depends, right? So let's say the catalyst for doing an event-driven investment is government approval of the deal, which could be 6 months from now or whatever it is, right? Subject to approval of the deal. Well, that might be 6 months when they hold on to it for example. Yeah, it's usually not more than 6 to 12 months. Yeah. Okay. Thoughts on the CFA? I think the CFA is better than an MBA in terms of thoroughly understanding finance. And for those who are not familiar with the CFA, it stands for Certified Financial Analyst Designation. I don't like it only because it's not fair. That I think you need to have an undergraduate degree in order to write the exam, and that's snobbery in my opinion. And that's why my program's not accredited either, never will be. But the CFA is very respected. The way it works is this. You write one exam each year for 3 years. That's it. And then you're a CFA charter holder, and you can put that beside your name, CFA. And the greatest concentration of CFAs in the world is actually in Toronto, where I'm from. That's why a lot of sell-side analysts love meeting with institutional investors in Toronto. They get very sophisticated questions. Yeah, and if you're going to do the CFA, they recommend a bunch of textbooks that will cost you close to $1,000. Don't waste your money, man. I want you to go to eBay and do a search for Schweizer. Okay. And Schweizer CFA books, buy them used, pay $50 max, and you'll get, instead of a massive textbooks, you'll get just a bunch of books this thick, which will help you work smarter, not harder, using those books. Yeah. Okay. Okay. And JK wrote URL to a daily to-do list. Please. Yeah. Let me know what you mean by that. Yeah. If you mean URL, you're calling me a loser. I completely agree with you. I'm just kidding. No, but give me a little bit more clarity, please. Yeah. All right. Moving on to Tommy J, who wrote, what brokerage account would you recommend using for a beginner? And do you recommend having different brokerage accounts? Yeah. Yeah. So in order to mitigate risk, what I always recommend doing is this. If you're using a well-known bank, then what I would do is just call the bank and say, do you have a brokerage division? If so, please transfer me. And then just use that brokerage department. And I don't want anybody in this call to do your own taxes. Don't ever do your own taxes. Doing your own taxes is like doing surgery on yourself. Always get an accountant. Always, always, always. And you want to ask your accountant as well before you start investing. Ask your accountant for advice for, hey, I'm about to start investing. I want to make sure that this is protected in my retirement savings account, which is called 401k in the United States. Can you help me do this so that when I buy these stocks, I'm not going to pay taxes until I take the money out? That sort of thing. Yeah. And if you're not sure what brokerage service to use in general, what I usually say is this. Sorry. What I usually say is this. Get a list of the top 5 banks in your country. Okay. And then call all 5 banks and ask all 5 banks to transfer you to the brokerage department. And ask all 5 banks, what are the fees on owning stocks? Whatever one is the lowest, then use that. In terms of putting money in multiple brokerage accounts, you also want to look into FDIC insurance, right? So if a certain amount of money is only insured in certain accounts and you have more than that amount of money, you might want to use 2 brokerage accounts. But again, I want you to ask your accountant first. Please, everybody, get an accountant. I'm begging you. You will save a lot more money in the long run. Yeah. And you also will better understand how to pay less in taxes by putting into your retirement savings accounts. Yeah. Okay. I don't know if I like this whole sitting down thing, man. You know, Tony Robbins always says that motion creates emotion. So this doesn't feel right for me sitting down, and you will never see me sitting down again after this call. And when you see me sitting, it means because I am sick. Yeah. All right. Let me get back to close up Chris. All right. That's a little bit too close. How you doing? Let's go here. That's good. All right. All right. I got a couple minutes left. Alexa, please stop. I have a couple minutes left, and if I don't answer your questions now, just save them for next week. Or if you're in my Silver MBA degree program, I'll see you in 5 minutes on my weekly Zoom call where you can ask me questions over Zoom. And when we use Zoom, you can always share your screen as well and have me help you with, I don't know, your LinkedIn profile, financial modeling, interview questions, whatever it is. My job is to help you. And so that call lasts an hour from 10 until 11 Pacific time, starting in 5 minutes. And then and that's for silver students. But if you're a gold, platinum, or diamond student, you can stay on for 3 hours. Yeah. And then I do one-on-ones after that. Yeah. And for those of you that are interested in the Silver MBA degree program, you can always go to harounmba.com. MBA does not stand for married, but available. Sorry. Go to harounmba.com. You can buy the Silver MBA degree program. And then in the very first lecture of your silver curriculum, there's always a link there for the call. Thanks. Okay. All right, give me 1 second. I'm going to close the close the door here. My neighbor started to cut his grass. All right. I also ordered a couple of these YouTube awards for my staff, my wonderful staff. Jean-Marco Lubiana in Toronto, as well as Cassandra Cox, who is my CMO. If you guys are interested in ever hiring a CMO to work with you, Cassandra Cox is great. I can introduce you. She works at Cox Media. She's unbelievable. For every $1 we spend on advertising, we actually make $9. She's great. And for those of you interested in hiring somebody to do your YouTube shorts or whatever it is, I work with a guy named Jean-Marco Lubiana. I'm happy to introduce you as well to them. They're wonderful. They're family. If you want an introduction, to either just email support@harounventures.com. And thank you. Okay. All right. Okay. And then Mac1111 wrote, "Hi, Chris. I just joined this live. I truly appreciate the first day of the MBA program. I hope you're doing well. Thank you. Thank you. And I do apologize for canceling the Tuesday night class. I never do that, but I was literally hooked up to an IV. And I think the doctor overreacted. I didn't need an IV. Yeah. You probably didn't like my sense of humor. I was trying to crack jokes. The nurse, Nicole, was cool about it. She laughed at my awful dad humor. The doctor was kind of a, yeah. Okay. All right. Tommy J wrote, "What is the importance of a P&L statement in business? What are the key components?" Yeah, a P&L stands for profit and loss. It's important for every business and for every household in general. I've talked a lot about, the corporate P&L. Let me show you when it comes to your personal P&L. You want to track all of your expenses, right? So, revenue is going to be your amount of money you get from your salary, et cetera. And then you're going to want to track all of your expenses in general, right? And that'll help you understand how much money you need to pay in taxes, et cetera. And the great thing about getting an accountant to do it for you, and the great thing about registering your own company name, is you can use depreciation as well to pay less in taxes, right? And so I think a P&L is very important. It's also referred to as an income statement. Your goal is to, within the confines of the law, pay as little in taxes as possible. That's why a lot of people like to invest in real estate, so you pay a lot less in taxes because of depreciation. Yeah, and that real estate elective I just showed you, that was actually for my MBA degree program students. I do have to wrap up this call, guys. I apologize. I know there's lots more questions. Thank you so much for your support, everybody. We did this together. And so I am grateful. God bless you. Thank you. And I'll see you all next week. I'll see my silver students in a minute or two. in our weekly Zoom call. And I'm going to end this call, as I always do, with a life-changing interview that I license. It's a Steve Jobs interview from the Silicon Valley Historical Association. Thank you, everybody, for all your well wishes. God bless you, and I'll see you soon. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.